What's up everybody? Welcome to the Stocks channel. Today we had another bullish follow through across all of the indices and we see the VIX getting crushed. In tonight's episode, I'm giving you everything you need to watch going into next week's trading session. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did go up over 1.5%. And we did get a price action close back above that 20 simple moving average level right about 416. Remember that is a bullish price action close because the price action is now above all of the moving averages. We still need to get one more day follow through and I would like to see another close above this level. Remember, the market is full of traps in both directions for both the bears and the bulls, and one day close above a resistance level or below a support level is not enough information to tell us that it's truly going to be the direction of the move. So right now I would like to see one more close on SPY above 416, but this is definitely looking like a bullish breakthrough for SPY. Remember, we had the battle of the gaps and we did gap up this morning and did open up another gap below. However, that gap above did start getting pressured today, but it did not fully close. Remember, this gap will close at a price of about 417.8, and we did not quite go that high during the trading session. So overall, a very bullish day, but remember that we still don't have that full bull trend. One more day of price action closing over 416 will start developing that bullish trend, and then SPY could start trending higher towards our price targets. So the upside price targets on SPY are still intact because we have not invalidated this bullish rally. We still have price targets at 423 and 427, but we still have a little bit of work to do to get back trending towards those targets. So right now on this close, we will have critical support at that 20 simple moving average at 416 and the gap below, which will close right around 412. 412 is a very critical support level, and if price action starts getting back below 412, that actually will start looking like a bearish development. I'm sure there's going to be a lot of people out there looking at SPY thinking this is some sort of ABC and that we still got downside to go. However, that is not really a valid wave count right now because we still are holding up above critical support. If we start breaking down below 412, this will look like a higher probability chance, but right now I don't prefer this wave count and I don't actually think SPY is coming down for a wave C. There is another wave count where we could have gone through a correction where we did do an ABCDE correction and now we're getting ready for an impulsive rally to the upside. So right now this is what I'm favoring the most because we did get a critical bounce off of that 50 EMA as support and we never actually closed the gap below at 400. Remember, I always said this, that I think this gap will get closed during the next major stock market correction. More than likely this was not going to be the major correction and it's just somewhere between a 4 to 6% correction. From the all-time highs to the low, we did get just a little bit more than 4%, so that does meet the criteria for a minor correction wave 4, and we still have a wave 5 higher to all-time highs. So right now, I think this is still a very strong bull market, and we still have another leg higher to go. Remember, there's no reason to try to be a hero and try to call a top in a bull market. If I switch SPY over to a weekly chart, you can see that we did close the week out above the 5 EMA, and we're still in a bullish trend on the weekly chart. The weekly chart is the stronger trend than the daily chart. Even though the daily chart did lose the bullish trend, the weekly chart did not. We're closing above the 5 EMA, and even in a very volatile week, we did still close way up here on the price action. So you can see that this is still a bullish chart on SPY, especially in the higher degree weekly chart. So right now, just remember that we have upside price targets at 423 and 427, and it does look like we could be continuing the bullish rally. Protect yourself to the downside on SPY knowing that your risk is below 412. By the time we get below 412, we'll already be assuming that we're going to close the gap at 400. So those are your critical levels to watch the price action on SPY going into next week. And remember that it's still a volatile market, so take advantage of the volatility while it's here, because even though a lot of people don't like this volatility, I can tell you that it's a lot better than this boring market that we just came out of where everything was just going sideways and we were just chopping around. Volatility is a trader's dream. Just make sure that you're sticking to a trading strategy and you're remaining disciplined. Next up is the NASDAQ 100 triple Qs, and we see the triple Qs going up over 2.2% today. The triple Qs did hold up above that critical support level at 322, and we did look like we were getting very close to retesting that resistance level at the 50 EMA. Right now, we're still trading below the 50 EMA, but we did see the price action closing back above the 5 EMA today. So critical resistance is going to be 328, and a bullish price action close on the triple Qs will be back above that 50 EMA level at 328. Remember, the triple Qs did have a very decent correction from the all-time highs, and that was because we did see a lot of selling in the tech sector. The triple Qs dropped just about 8% from the all-time highs, and it did look like that we finished a nice ABC structure to the downside. Remember, after an ABC correction, we could resume the bullish trend, and in the larger degree, if we zoom out on the triple Qs, the last thing we formed was a higher high and potentially a higher low. That is what bull markets look like, higher highs and higher lows. Was this a nice drawdown from the highs? Absolutely, and that makes it a better buying opportunity for people that were waiting to buy in lower. Remember, even bears want to buy when something is a great deal, and with the triple Q's 8% removed from the highs, this could be the start of a next bullish rally. So after an ABC to the downside, we're going to start looking for a potential 5-wave count to the upside. So this could be the beginning of a next 5-wave rally to the upside, which could take us back into the 340s on the triple Q's. But right now, this is just speculation, and we need to continue to watch the price action very closely. So the critical test for the triple Q's is going to be that 50 EMA at 328, and then back above the 50 EMA, we still got to get back above that 20 simple moving average. That is a negatively sloping 20 simple moving average, so that's a moving target, but it does look like it's going to be somewhere around triple Q's levels of 332. Now to the downside, the critical support level for the triple Q's is going to be 324 in this upward trending trend line. This trend line is going to be somewhere on a break below 318, and that does mean we could be going down to triple Q's levels of about 309. So critical support on the triple Q's is going to be 322 and about 318, and a break below those levels will increase the probability that we could be coming back down to about 309. The critical resistance to the upside is 328 and about 332. Remember, the triple Q's are not in a bull trend or a bear trend, but we're zooming out and we're looking at the overall larger degree trend, which is still a bull trend. Higher highs and higher lows are still bullish, and we would need to get back down below about 309 to confirm that the triple Q's could be going into a bear market. But right now, this just looks like a correction from all-time highs, and it could be the beginning of another bullish run. Next up is the Dow Jones, and we saw the Dow Jones going up over 1% today, and we also saw the Dow Jones closing back above that 20 simple moving average. So the Dow Jones has a gap above to fill, and that gap will get filled right around 347.50. The Dow looks like it's going to have no trouble closing that gap in the very near future, which does align with our theory that we could be going into another bull rally. We're about to see the Dow potentially go back to 347, and we just saw the S&P500 SPY ETF closing back above the 20 simple moving average. So overall, we're set up for a very bullish rally going into next week, but the price action has to stay above these critical 20 simple moving average support levels. So critical support on the Dow is going to be right around 341, and if that level breaks down, this could have been a false breakout to the upside, and we could be going back down to retest support at 337 and the 50 EMA right around 334. If 334 breaks down, we're likely closing the gap at 331.70. So overall, you can see the Dow Jones did get its bullish trend back today, and all of these moving averages on the Dow Jones are now stacked to the full bull side yet again. So the Dow Jones is still looking very strong, and once that tech sector starts rallying, we'll likely see strength returning to the S&P 500 as well. So in all three indices, we're starting to see some bullish formations, but we need to see confirmation and follow through going into next week. Next up is the Russell 2000, which went up over 2.4% today, and the Russell 2000 closed right at resistance, which is the 50 EMA level of 221. If the Russell 2000 can break back above the 50 EMA, we're then looking for a critical resistance level at that 20 simple moving average at 222. So the Russell is looking like it's trying to get back into this wedge after breaking out to the downside. That critical support level around 215 did not hold up, but we did bounce and close back above that level going into today. Now we will still have critical support at the support trend line, which is right around 219, and a break back out of the wedge will still have support at 215 and 209. But as you can tell from the Russell 2000, it doesn't have bullish trending or bearish trending, so the critical price action at these resistance levels is going to be the key. Next up is the Arkk ETF, and we see Arkk going up over 4.8% today. Arkk did bounce off of that support level around 97, and it did close back above the 5 EMA today. Remember that Arkk is still in a full bear trend, so a lot of these pops are likely going to get shorted by the bears at resistance levels. So watch critical resistance on Arkk at 106, 109, and that 20 simple moving average at 115. Remember, in a bear market, the trend is downward and the path of least resistance is still lower. So even on a pop in Arkk, don't get overly bullish because it is in a bear market and it still could be heading much lower. So we'll continue to watch Arkk very closely to see if it can reverse the bear trend, but right now, just be defensive and don't get too long on an ETF that's in a bear market. Next up is the VIX, which got absolutely crushed today, going down over 18% and closing back below that critical level at 20. Remember, I said this last night that if the VIX closes below 20 on Friday, that will be a great indication for the overall bull market because that means fear is now leaving the market. We did get that Bollinger Band squeeze on the VIX, and we did see the VIX spiking into the high 20s, and that was indicative of the stock market correction that we likely could now be coming out of. Remember, the VIX over that critical level of 21.6 was a warning sign that we could be going into a stock market correction. That correction now could likely be over because we see all of the fear exiting the market in only 2 short days. So watch the VIX very closely, because if it stays below 20, that's going to increase the probability chance that the correction is over and we're going back into a bull run. If the VIX gets back over 20, that can mean the correction is not yet over and we are still going lower. So watch the VIX very closely, because it is one of the most important indications of fear right now. And if fear is coming back into the market, we know the correction is not yet over. Next up is gold, which had a bullish day today, closing back above our price target at 1829, and it's still on that full bull trend, getting ready to run to the next price target at 1876. Look for downside support at 1830 now that we've broken through that level for the second time. Next up is silver, which also had a bullish day today, and we still see silver in a full bull trend. We still have resistance and price targets above at 27.6 and 28, with downside support right around 26.6. Next up is Bitcoin, which is currently down about 0.75% and still holding up above that critical support level at 48,600. If 48,000 breaks down, look for support at 45,000, and if 45,000 breaks down, look for Bitcoin to be possibly heading back to 30,000. Upside resistance is still going to be 55,000, and we need to get back above 55,000 for Bitcoin to try to go back into a bull market. Right now, the longer Bitcoin stays below 55,000, the stronger the bearish trending is developing. So Bitcoin is not looking very strong right now because it's not developing any bullish trending, and the trending and the momentum is actually building up in the bearish direction. So watch Bitcoin very closely over the weekend, because if it does start breaking down below support levels, it could be going into a bear market. Next up is Amazon stock, which went up over 1.9% today and did close back above that price target at 32.11. We still are below the 50 EMA, which is going to be a critical resistance level, which is now at 32.56. Watch that critical resistance break out very closely, because if Amazon gets back above the 50 EMA, it could be going back into a bull market. Downside support levels are 32.09 and 31.38. Next up is Tesla stock, which went up over 3% today and did get very close to that resistance level at 594. Critical resistance is going to be 594 and 633, with the critical support level at 557. If the critical support level at 557 does break down, Tesla could be going all the way back down into the 400s. So make sure if you're in Tesla, you have a stop loss set below 557, because that is a very critical support level. Also note that Tesla did go into a full bear market today, because all of the moving averages are now stacked to the bear side and the price action is below all of the moving averages. So Tesla is joining Arkk in the bear market, and that is not great news if 557 does break down. So treat the 557 support level with the respect that it deserves, and make sure that if it does break down below that level, you have an exit strategy. Next up is Apple stock, which went up about 2% today and did get rejected at that resistance level at 127.8. We still are below the 50 EMA, which is going to be the most critical resistance at 128.5. Critical support on Apple is now 126, and if that level can hold up, we could see Apple trying to get back into a bull market here. On the financial sector, we went up over 1.5% today, and the financial sector is still looking very strong and very bullish. The price action is over the 5 EMA, and we're still holding on to the bullish trend. Next up is the industrial sector today, going up 1.38%, closing back above the 5 EMA and still holding on to the strong bull trend. The industrial sector is still looking very strong, and it does have a gap above that it needs to fill. Next up is the healthcare sector, going up about 0.5% today, still holding on to the bull trend, and the price action still closing above the 5 EMA. On the energy sector, we went up over 3% today, closing back above the 5 EMA and still holding on to the very strong bull trend. So going back to the S&P 500, you can still see that all of the sectors are looking very bullish, and we're finally starting to see the tech sector joining the rally. So remember to stay objective, and you want to be a bull in a bull market. I can't stress it enough that we're still in a bull market, and if you look at all of the sectors and you look at the overall trend of this stock market, it is still in a bull market. Eventually, we will hit a critical top, and that time will trigger a major correction, but remember, we're staying objective and we're trading the chart in front of us, and we're taking it day by day. Right now, when I look at SPY, this is a correction that we're coming off of, and we could be going back in for another leg higher, which could take us to new all-time highs, and who knows how long that bull market could last for. So we're going to continue to take it one day at a time, and remember that the VIX is signaling that fear is leaving the market, and we could be going to new all-time highs. Also remember, on the Stocks Channel Discord, I'm doing intraday updates and analysis to always help you stay on the right side of the market. I'm also bringing new trade ideas to you weekly so that you can absolutely crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of the video. All right, next up, let's check in on Disney stock, and we did see Disney getting sold off after earnings. Disney had a huge gap down, but it did find support around 170, and it did open a gap above that has yet to fill. The gap above on Disney will fill around 176, and the critical resistance level is now our previous support, which is right around 181. So on Disney stock, if we break below 170, it's time to get out of the stock, because it could be coming all the way back down to 160. Above 170, you're looking for a retest of resistance at 181 and a possible gap close at 175.8. Remember that Disney is now in a bear trend, so you don't want to get overly bullish on a stock that's in a bear trend. So if you did not have an exit strategy on Disney, your exit strategy would be a retest of resistance at 181. If 181 breaks down, you're then looking for breaking back above the 50 EMA, which is going to be right around 184. So we'll continue to cover Disney for a few more days and see if it can try to get back into a bull run. Remember, this is a strong company which has a bright future, and this could still just be an overreaction to the earnings report. So thanks for watching, everybody. Happy Friday, and I hope you have a great weekend. And as always, I will see you in the next episode.